pull the money out. So I think there are a whole bunch of hedge funds that will close shop, either because investors are taking money out or because they don't want to stay the course. So the most important thing to be a hedge fund manager is to manage risk. And that's why investors give you the high incentive fee.
Hence the term hedge.
Hedge,
You're
correctly.
supposed to hedge. Let me ask now, they also are getting another stumbling block thrown at their feet, and that is the potential rule change to trading that Gary Gensler, the Securities and Exchange Commission chair, wants to make. Hedge funds make massive block trades. How do you foresee his changes, potentially involving things like ending payment for order flow practices, affecting hedge funds, and quite frankly, could any kind of contagion spill over to the retail investor? So
this payment for order flow is mainly aimed at the retail investor. Today, the retail investor accounts for about 20% of the trading. So firms like Charles Schwab, E-Trade, the big retail brokerage firms, Ameritrade, Robinhood, they shop these orders to a firm like Citadel or Virtue, and they get paid for that order flow. In fact, these brokerage firms last year made $3.8 billion paying the brokerage firms for order flow.
Right.
Now, what you do if you're E-Trade or Charles Schwab, you give it to your favorite execution broker. And while the public thinks they're getting no commission, they're not getting the best execution price. So there's commissions built into the system. So I think it's a great idea that Gensler is trying to make it much more competitive and put it into an auction system. But knowing Washington and knowing the lobby of the brokerage firms, I'm not optimistic that anything will get done in the near future.
Well, you are running money for your family office. The markets have been very hard to anticipate. What do you see as an opportunity right now, Raj?
Yeah, so we invest in disruptive technologies. And we've been very cautious on the market. It's a very, very challenging year this year. What we are seeing now is the valuations have compressed. And what we are doing is looking at companies or sectors that are somewhat recession resistant. So there are 3 sectors we've identified. One is cybersecurity. Every day, people are trying to hack companies in the United States. We look at cloud computing, which is important, and electric vehicles. This trend towards clean energy and electric vehicles is a secular trend. And within that, we have companies that we've invested in.